Hi, I'm Dan Gable with Shore Murphy and Associates of Casey, and this is another episode of Big Agent in a Small Town. Today we're going to talk about workers' comp insurance audits. And obviously, you hear the term audit and it can be intimidating. But once you know the process, it's really straightforward and can normally be pain-free. So first, workers' comp policies are figured by your estimated payroll for your business. So you obviously use your best estimate for what your payroll is going to be, and your initial premium is figured that way. The purpose of the insurance audit is to see at the end of the policy term whether your estimated payroll was less than or more than what your actual payroll was during that policy period. If your payroll was less than what was estimated, then you'll most likely receive a refund. If your payroll was over what was projected, you'll most likely receive a bill for additional premium due for the audit. So insurance companies normally do audits in three different ways. The first is a mail audit. You'll get normally a few page form in the mail. It'll ask maybe 2 or 3 questions about your business operation, about the owners in the business, and then ask about what employees and what each employee's job duties and payroll were. And also normally in addition, you'll furnish quarterly payroll reports and things like that to document what your payroll was during that policy period. The second kind of audit is a phone audit. That's basically the same process, except you're going to have someone over the phone asking the questions about your operations and owners and things like that, rather than you filling out the paper that you've gotten in the mail. And then you'll normally email over that documentation, like the quarterly payroll reports and those kind of things. The third kind is what it's called a physical audit, where either a representative from the insurance company or a third party they work with is going to come out, I'll ask you the question, and I had mentioned before as far as your operations, ownership, employees, things like that, and then pick up physical copies of the evidence for your payroll. Well, that's going to be more common in larger companies. Let's say companies with more than 10 or 20 employees. Most small businesses, the companies are going to do either that mail-in form or the phone audit. Another really important thing to keep in mind with your audit is if you use any subcontractors at all, you want to get certificates of insurance showing that they have their own workers' comp coverage during your policy period. If you don't have those certificates of insurance, you can get charged for those subcontractors on your audit as well too, and that can be a really sizable additional premium as well there. The other thing that I recommend lastly is if you have if your payroll can fluctuate a lot in a year, or do quarterly check-ins with your agent, where that way if you're 3 or 6 months in and your payroll has been a lot higher than estimated, you can go ahead and adjust on your current policy and have payments spread out a little bit rather than a whole amount being due at once. And it's after that insurance audit. If you have any questions about audits or small business insurance, please reach out to me by phone or text at 217-932-2267 or by email to Dan, D-A-N, at Shore Murphy Casey, SHOREMURPHYCASEY.com. Thank you.